The current live intraday price for BigBear.ai Holdings Inc., BBAI, sits at $7.225, representing a drop of about minus 4.81% in today's session as of the latest market snapshot. This steep intraday retreat is a sharp counterpoint to the powerful upward momentum the stock had been enjoying, which immediately creates a tension between the recent market expectation and the present reality. Just days ago, BBAI was rocketing higher, fueled by a narrative of renewed governmental and defense-related artificial intelligence contracts and strong speculative volume. The street was buzzing about the stock's potential to finally catch up to its more established peers in the defense AI space, specifically after securing a prominent role in a major U.S. Navy exercise, which offered a fantastic short-term catalyst for traders. That military contract news, combined with the general frenzy around AI names like NVIDIA stock, had pushed BBAI higher for a notable stretch, suggesting the long-awaited payoff for their pivot to higher-margin software solutions was finally arriving. However, today's heavy selling volume, over 47 million shares in the morning alone, tells a different story, one where the market is now aggressively pairing those recent gains, suggesting that either the magnitude of the contracts wasn't enough to satisfy the frothy valuation, or perhaps that profit-taking has simply overwhelmed the new wave of buyers. The expectation was a smooth continuation of the rally. The reality is a stark reminder of volatility and the quick money nature of speculative trading in this name. This kind of price action is very common in smaller, momentum-driven technology stocks, and it forces a closer look at the underlying fundamentals to see if the recent gains were justified in the first place, or if the stock is merely a short-term trading vehicle. It's a classic case of excitement clashing with the actual mechanics of stock market trading, where sentiment can turn on a dime. The immediate drop today is a crucial moment for BBAI investors. For a stock that has soared from its 52-week low of $1.36 to flirt with its high of over $10, any substantial dip like this needs to be viewed through the lens of a potential structural shift, not just a momentary blip. The significant trading volume on this down move indicates that large blocks of shares are changing hands, which can be interpreted as either aggressive short selling, capitalizing on the extended run, or existing holders, both retail and smaller institutional players, deciding to cash in profits. We know from institutional filings, specifically the June 30, 2025 disclosures, that major firms like Vanguard Group, BlackRock, and Citadel Advisors have collectively increased their positions, holding a substantial number of shares, which hints at a longer-term institutional belief in the investment. However, what the price action today suggests is that the conviction among momentum traders is wavering. These traders often operate on platforms like Robinhood or use various online investment tools, and they are highly reactive to short-term news and peer comparison. When they see a larger player like Palantir, for example, making major moves, BBAI often gets swept up, but it's also the first to suffer from profit-taking because its underlying financial profile isn't yet as robust. The core challenge for BigBear.ai is transitioning from a services-heavy, government-dependent contractor model to a scalable, high-margin software business, much like what is being successfully chased by many modern AI companies. While the recent contract announcements are good for the top line and validate their technology, the market is constantly scrutinizing the pace of this fundamental shift. The latest quarterly report, which showed a revenue decrease year over year, primarily due to lower volume on certain Army programs, coupled with a substantial net loss driven by non-cash charges, certainly gives traders pause. Let's expand on the expectation versus reality dynamic. The expectation is because they are in the defense AI space, and given the geopolitical landscape, their success is almost guaranteed. The reality is that government contracts, particularly with agencies like the U.S. Navy, which they recently announced a collaboration with, can be lumpy, subject to political budget cycles, and are often low-margin service agreements rather than pure software licensing. BigBear.ai is an AI-powered decision intelligence solution provider with a focus on national security, supply chain management, and digital identity. Their main value proposition is their Pro Model software and their AI capabilities that help clients make faster, data-driven decisions. They operate with two main segments, the government sector and the commercial sector. Historically, the government sector has been the bedrock, providing a stable, albeit sometimes slow-growing, revenue stream. The recent news about enhancing maritime domain awareness for the U.S. Navy's Fourth Fleet is exactly the kind of contract that feeds the defense AI narrative, but the market's initial parabolic response may have overshot its true financial impact. The key to long-term success and justifying the elevated valuation lies in the growth of their commercial business and the increased adoption of their pure software offerings over their consulting-heavy service model. This is where firms using Schwab Intelligent portfolios and other broad market investment vehicles look for stability, a steady, predictable, high-margin software as a service or platform as a service model. BigBear.ai is actively working on this, but it's a marathon, not a sprint, and the current trading action suggests that short-term speculators are demanding sprinters' results. Considering the technical landscape, the recent spike has undoubtedly attracted a significant number of retail investors, often engaging in self-investing on platforms known for their low or zero-fee structures. This heightened trading volume during the rally meant that the stock moved quickly, but the downside risk is equally magnified when that retail conviction breaks down, which appears to be happening today. The rapid succession of news, from the naval exercise to the partnership with the Washington Commanders for its training facility naming rights, a non-core business item but a visibility booster, all contributed to the excitement. The contrarian viewpoint, which today's price drop supports, is that this stock's performance has been overwhelmingly driven by market sentiment surrounding AI rather than a definitive quarter-over-quarter execution on margin expansion and profitability. When you look at the financials, the company is still reporting significant losses, and while some of those are non-cash like goodwill impairment and derivative liabilities tied to their SPAC origins, the core operational loss is still a headwind. Investors using platforms like Fidelity or Interactive Brokers for a more fundamental approach are likely watching for concrete evidence of a path to profitability, which remains elusive in the near term. The discussion about BBAI inevitably leads to a comparison with peers, primarily Palantir. This comparison is a major source of the high expectation. Palantir's successful navigation of government contracts and its push into the commercial sector has set a high bar. For BBAI, the expectation is that their technology, which is genuinely strong in areas like predictive analytics and logistics, will follow a similar trajectory. However, the reality is that Palantir is a significantly larger and more established entity. BBAI's market capitalization, while higher now due to the rally, still pales in comparison, and its commercial traction is less mature. The key for BBAI's valuation moving forward is the successful deployment and expansion of their software products in the commercial supply chain and logistics space. This area offers the potential for highly repeatable, high-margin revenue, but it's an intensely competitive field. Every time the stock trades up on defense news, it validates the government model. But every time it pulls back sharply, it raises questions about the pace of commercial adoption and the total addressable market outside of Uncle Sam. Let's look more closely at institutional activity, as that provides a crucial counterbalance to the volatile retail trading. The most recent filing showed a substantial increase in institutional holdings, with new positions being initiated by names like Jump Financial. This signifies that sophisticated capital sees an investment opportunity here. They are likely looking past the short-term volatility and focusing on the company's backlog of over $380 million as of the last quarterly report. This backlog, which represents future revenue from signed contracts, is a vital metric for stability, particularly in the government contracting business. The reality here is that while the stock is volatile in the hands of the market, the company's future revenue visibility is actually quite strong. The tension is between the reliable long-term contracts and the wildly fluctuating stock price. For an individual brokerage account holder trying to decide on an entry point, this dynamic is incredibly frustrating. This is a stock where disciplined dollar-cost averaging and patience, the hallmarks of long-term value online investing, would likely serve better than trying to time the momentum swings. As we shift toward the future outlook, there are several catalysts that could dramatically exceed the current market's tempered reality. Firstly, a major material commercial contract announcement, not just a strategic partnership, but a multi-year high-value software licensing deal with a Fortune 500 company, would instantly re-rate the stock. It would prove the commercial scalability and high-margin potential of their products. Secondly, the upcoming earnings report, expected in early November 2025. The consensus EPS forecast is a loss, but what matters more is the commentary on margins, the revenue mix between services and software, and the updated guidance. If management can demonstrate meaningful progress on moving up the margin curve, the stock will respond favorably. On the risk side, the primary threat is the continuation of its cash burn and the possibility of further share dilution, which has always been a cloud hanging over smaller, growth-focused technology companies. They may need additional capital to fund the aggressive shift to the commercial sector and keep up with R&D, especially given the rapid pace of development at competitors and in the broader AI field, where firms like Tesla stock and Apple stock are also making massive internal strides in AI application. This is why having cash on the balance sheet, which they do, is so important, but investors want to see that cash used efficiently to generate high-quality revenue. To truly gauge the conviction in this stock, I have to ask you, the viewer, a direct question to hear your perspective. Comment below how many shares of BigBear.ai Holdings Inc. BBAI you currently hold and whether you believe their defense contracts or their commercial growth is the better argument for a higher stock price. Your input is essential to understanding the prevailing retail sentiment. The future of BBAI depends less on any single contract and more on their ability to execute a multi-front strategy. They need to maintain the stability of their government revenue, which acts like an anchor, while rapidly accelerating the growth and improving the margins of their commercial AI software. If they can achieve this dual success, the stock's recent high will look like merely a stop along the way. If they stumble, particularly on the commercial side, or if the government contract revenue continues to see attrition, then the recent high will likely represent a peak driven purely by speculation. The current price action is a necessary, albeit painful, recalibration of the overly optimistic expectations set by the initial contract news, pushing the stock back into a critical zone where the market will again demand proof of execution over promise. This continuing tension between the compelling narrative of defense AI and the harder financial reality of building a scalable software business is